Hello, YouTubers. This is Atilla Yesilada reaching out to you from Istanbul, Turkey, and you are at the Real Turkey channel. Well, we cover news and analysis about Turkish economy, politics, business news. If you want to know who Atilla Yesilada is, check my link at the bottom of this video, where you can find a brief resume, only 5 pages. Tonight, I want to talk about Turkish economic policy, that is, fiscal policy and monetary policy, which has been the only engine of economic activity this year. It has reached its limits. In fact, doing more fiscal or monetary stimulus would push the boundaries of what's acceptable to the economy and investors, and is liable to cause deep earthquakes in the coming months. Turkish economy is not doing very well. Even our economy minister, Mr. Berat Albayrak, expects barely tiny amount of GDP growth at the end of the year. I look at several surveys, by IMF, World Bank, the monthly survey by our central bank, which asks the forecasts of private economists as well as participants from the non-financial industry. No growth. Reuters survey, no growth. In the summer, things have gone a little bit better because, we have a huge inflow of tourists, and we had 2 religious holidays called Eids, where people vacation and buy gifts for their relatives and friends. But as we reach the end of September, when tourists leave and the households have exhausted their credit cards, Turkish economy is bound to head for recession again. The latest data says, which is by Turkstat, our statistics agency, that as of June, non-farm unemployment has reached 16%. 1 every out of 4 youth in Turkey is currently unemployed. And that's the peak of the employment season. I mean, in the winter, it's hard to imagine a situation where employment will get better. Turkey has lost 800,000. Obviously, these people cannot spend anymore. Total unemployment, including those in the farms, number 4.3 million people. They can't spend. The private sector has lost confidence in the government. Therefore, in the first half of the year, and equipment has declined by 25% vis-a-vis the last year. So the government understands using fiscal and monetary policy is the only way to come out of recession. Our President Erdogan has another problem. He is facing 2 challengers who used to be his former lieutenants. First is the former economy minister, Ali Babacan. The second one is our former prime minister, Professor Ahmet Davutoglu. Both of these gentlemen are launching their own parties, and according to 3 polls, they can probably steal 10-12% of AKP's vote, which means in the next elections or early elections, Mr. Erdogan has slim chances of being re-elected as president, and AKP and its ally MHP may very well lose their slim majority in the parliament called the Grand Assembly. So let's get to the economic policy, and let me explain to you why it is stuck, why it is at the edge of abyss. Yesterday, we have received the budget data for the first 8 months. The August budget showed a tiny deficit, surplus, less than $100 million. But overall, in the first 8 months, budget deficits reached 68 billion liras, more than $10 billion if you care, which was 58 billion liras last year. Now, that doesn't reflect the whole truth, because this year, by changing the law, the government appropriated roughly 50 billion liras from our central bank. Central bank has transferred its capital surplus to the central budget. So the actual budget deficit, excluding this one-off transfer, would be over 130 billion liras. Our team of economists expect the budget deficits to reach perhaps 5% of national income at the end of the year, which are very difficult to finance because borrowing rates are high and Turkish banks don't simply have enough liquidity to lend both to the government and the private sector. That's called crowding out. The monetary policy, even though our president doesn't realize it, is stuck too. Over the last two meetings, monetary policy meetings, our central bank reduced interest rates by 725 basis points. Currently, the policy rate, which Americans call the Fed funds rate, is 16.25%, which sounds high. It's one of the highest in emerging markets. But the real rate of interest is roughly 2%. Given Turkey is perceived as riskier compared to many of its peers in the emerging markets universe, Turkish experts think we need at least 4% real interest rate to keep foreign investors and Turkish depositors in Turkish lira. Now, I am 100% sure that the central bank will not listen to this advice, and in the upcoming meetings, it will continue to cut interest rates. Foreign investors may not care, as far as I know, in particular if Fed announces a long-term monetary easing program on Wednesday night after the FOMC meeting. But the problem is this: the average TL savings deposit rate is roughly 18%. And with inflation running at 15% as of August, Turks really don't have any incentive to hold Turkish lira, which tends to suddenly depreciate very rapidly. It is a risky currency. So they are migrating to FX deposits. Over the last data week, individuals have bought roughly $500 million of FX deposits. If the central bank cuts interest rates further, which would of course be emulated by our commercial banks, Turks will accelerate what we call dollarization, that is, holding their wealth not in Turkish lira but in foreign currencies, which would of course increase demand for dollars and euros and thus lead to depreciation of the Turkish lira, which causes inflation and slows down economic activity. There's another problem here. Inflation data is compiled and published by the aforementioned Turkstat, Turkish Statistics Agency, which the opposition accuses of pandering to the interests of the government. As an economist, I really don't know if this is true, but I'm active in the social media. I receive a lot of comments that actual inflation is not 15%, but 20%. I'm not saying this is true, but this is the perception, and perception is more important than reality. So as far as Turks go, the real interest rate on Turkish liras are negative. Now imagine a situation where central bank cuts rates further. They will immediately move to foreign exchange deposits, or perhaps take their money out of the banks and invest into cash gold and cash foreign currency. This is why the monetary policy has reached its limits. But unfortunately, our president and his advisors don't understand that. In a recent speech, our president stated that he wants policy rates, central bank interest rates, to decline to single digits as soon as possible, which means another 700%, 700 basis point rate cuts by the central bank, which would, of course, kill the Turkish economy because, the exchange rate would shoot up and make imports extremely expensive. The same thing applies for fiscal policy. Let me give you some figures. As of August, the annual growth rate of tax revenues was only 9%, whereas the annual growth of non-interest spending was 22%. Two conclusions emerge. A, this economy can't live without fiscal stimulus. B, it's very difficult to produce enough savings to reduce this gap. I mean, how much are you going to cut without really hurting the poor and social welfare programs to close the gap between 9% revenue growth, tax growth, and 22% spending growth? But once again, unfortunately, our economy team doesn't understand that. So one thing they can do, of course, is to change the law again and to ask the central bank to print money, which is fine for Fed and the European Central Bank and the Bank of Japan, all of which are struggling with inflation or low growth. In Turkey, with inflation at 15%, printing more money would lead to another explosion in inflation. This is why I want to reiterate one more time that economically speaking, rationally speaking, Turkish economic policy has reached its limits. Going further, trying to provide more stimulus to increase economic activity will lead to problems. Let's don't say crises. I hate the word crises because everything is a crisis. It won't be a crisis, but it would deeply upset the economy, investors and banks who lend to Turkey in foreign currency. This is why I am extremely skeptical that Turkish economy and markets will do better in the coming months. In fact, lethal mistakes by Ankara are a strong possibility. In particular, if Mr. Erdogan's rivals, Mr. Ali Babacan and Professor Ahmet Davutoğlu, gain ground in the polls, which AKP religiously conducts every month. Okay, dear YouTubers, this has been a long video. You have listened to Atilla Yesilada, whose resume is at the bottom. This is the Real Turkey channel. We come online once or twice a week to explain the facts as we understand about Turkish economy, politics, and business. If you like this video, please subscribe or share it with your friends so that people can hear the reality of what's going on in this lovely country. Goodbye now.